The Federal Reserve announces a massive rate cut. What happens next here in Lafayette? Hi, I'm Geoff Gooch, your local Lafayette real estate resource of choice. Well, if you haven't heard, the Federal Reserve today announced a half-point rate cut. Now, the consensus has been that we were expecting about a quarter point. In the last week or so, there's been some debate. Would they go half a point? Would they go a quarter point? And they went a full half of a point. Now, the Federal Reserve does not directly set mortgage rates, but the Federal Reserve rate does factor into the decisions that banks make about their lending rates. So it is highly likely that this is going to trickle down into mortgage rates. And we wanted to talk a little bit about what that means for housing here in the Lafayette, West Lafayette area, and greater Lafayette, Tippecanoe County, and all the surrounding counties. So it's a half percentage point. So that's down from more than a 2-decade high. So it brings the rate down to about 4.9%. They decided to lower the interest rates because they're confident that inflation is finally coming back down to their 2% goal, and they want to prevent the job market from softening any further. Now, they're going to continue to track this. Are there more rate cuts coming? Most people think yes, but this is the beginning of that cycle. Now, they're expected to cut it a few more times, but they don't know exactly how many times and how often they're going to do it. So it's entirely possible we could go another Fed meeting without a rate cut, depending on how this rate cut influences the numbers that they're seeing. They are keeping a wary eye on an uptick in unemployment, but for the moment, the Fed seems to think that the economy is basically strong. Now, if unemployment goes up a little bit, I think it's entirely possible that they hold the interest rate for another session or two. I don't think they'll raise it again, but they might hold off on cuts a little bit. So it's the first cut to federal interest rates since March of 2020. Almost 4.5 years since we have seen a rate cut from the Fed. And it's going to bring us down to a target of 4.75 to 5%. Which is the range that they've set. It's a little lower than the range they set since last July, which was 5.25 to 5.5. What is that going to mean for us? Well, let's talk a little bit about what the federal funds rate is and how it relates to mortgages. So the yield for government bonds is directly tied to this federal rate. And that is indicative of our Federal Reserve's monetary policy, and they are the national banking group who manages our monetary policy. Rates had already hit a 19-month low last week at 6.2% for a 30-year fixed loan. So rates are already down compared to where they had been, north of 7% over the last year. They had been trending down, but this half-point reduction is certainly going to help bring that down a lot more. But are there unintended consequences? Absolutely. So here's how it's going to affect us here in Lafayette and West Lafayette. We have a supply and demand issue. There is more demand than there is supply. There are not enough people selling their homes for the number of people that want to buy homes. And some of that is because people feel that they are rate locked. They feel that the rate that they have on their current mortgage and their current home is so great. Some of these people have 2 and 3% mortgages that they're not willing to trade up to a 6% or even more mortgage. So they are not going to sell. They're not incentivized to sell. Now at 5.75%, maybe they'll be incentivized to sell because they've been holding off and they need to sell. Need might be overstating. Maybe they want to sell. Maybe they're empty nesters and their kids have gone off to college and they need to sell the big family home and move to a downsized home. Perhaps they want to become snowbirds. Perhaps a family is growing and you need more space. So they're going to need, they want to sell, but they're perfectly fine living where they are at the moment. But the moment that interest rates start coming down, they'll consider selling because they need to get a mortgage for their next home. Does that make sense? I think it does. But the unintended consequence is that there's not enough supply out there already. And some buyers have been holding off on buying because of that high interest rate. You're going to combine those two factors, and now we're going to have a glut of sellers coming on the market, with hopefully some more sellers coming on the market. So we're going to increase buyers, but I don't think we're going to increase sellers in proportion to the number of buyers that are going to increase. So sellers are going to go up a little bit and buyers are going to go up a lot. And what's that going to lead us to? Well, exactly really where we are and where we have been. It's come down a bit, but into bidding wars. And even if it doesn't get into a bidding war, just not enough homes for the buyers that are out there. We work with a lot of first-time home buyers that we have to go into 5 and 6 and 7 offers on different homes before we finally land a deal for them. And in most cases, we are not escalating up. We're not paying over the value of what that home is. We're just not willing to play that game. But it means that you got to wait for the right one to come along for those that are willing to pay more than the house is actually worth. And most people aren't really willing to do that in this market. So it's a question of, can you sweeten the deal in such a way that the value of the house isn't the only thing? Can you pay some fees? Can you lower their costs to sell? There are other levers that you can pull on to help sweeten a deal other than just bidding up the price of a house that perhaps isn't worth what you're actually bidding it to. So these buyers are now going to come out onto the market because they're like, yes, interest rates are coming down. That's what we want to see. I'm willing to buy a house. You and everybody else. So now we're going to get into these multiple offer situations. So interest rates coming down, that's a good thing, but the law of unintended consequences means that we're probably going to have some short-term pain in availability. So if you're interested in a home here in the Lafayette or West Lafayette area, here is what I want you to do right now. Right below here is my contact information. Send me a text, 765-413-6190. Send me a text and say, selling in Lafayette or buying in Lafayette. And let's talk about what this rate cut really means for you and what we can do to get you in or out of your current home here in the Lafayette and West Lafayette area in Tippecanoe County, White County, Carroll County, Fountain County, anywhere here in the greater Lafayette area. I'm Geoff Gooch, your local Lafayette real estate resource of choice. Make sure you hit that like and subscribe button.